Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
Welcome to Sound Economies with Mel and Peter, an East meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Mel. So, how are you doing, and how has the week been so far?
Hi, Peter. So we've had an eventful week, as we'll discuss in a bit. As far as here in the Manila team, we have published several think pieces that gives us a more detailed look into the US elections and its effect on the global markets. And it's a pretty exciting read. We have two articles that are hot off the press Monday and Tuesday. So it's good to check that out on the Lundin's Investor Insights website. How are you, Peter? It's been an exciting week for you as well.
Yeah, sure, and I agree. Of course, check in on our website, our app. Yes,
Right.
um, busy, exciting week. Yes, of course it is with the U.S. Election. It's always it's a big event, and of course
Mhm.
it's a discussion point with each and every investor we speak with. It is not that it leads to any sort of change in investor decisions as such. I think some investors have sort of just waited a bit to see what happens,
Mm-hmm.
postpone some decisions. But it is, of course, a big discussion point and exciting it has been. And of course, we will spend some time on it today here as well, Mel. Yeah.
Of course.
But we have other things as well. Other things go on in the world, and actually, you have some observations about the global electric vehicle (EV) battle. And then a funny story about an interesting story about we have the Chinese tax collectors that have been around in China.
Mm-hmm.
And the question is there more into it than they're just trying to collect the tax? And of course, then we have the US election with different aspects, some losers and winners in the equity market. Sort of also the consequence a bit into the fixed income market in particular that Trump is in control of both the Senate and the House. Discussion on Fed, will they sort of change their attitude or speed or whatever? Yeah. And then,
Mm-hmm.
as always, we have in the end the global outlook on the financial markets, and maybe there's a slight consideration there for, this time from our side. We will see. Well,
Right.
but let's jump back to the global EV battle. What do you say?
Right, Peter. So it's a very exciting time apart from politics. Companies globally have begun reporting their third quarter performance. And what came as a surprise to in the EV space is that China's BYD has outstripped Tesla in terms of total revenues for the third quarter. So it's a quite a sizable difference. So BYD reported some $28.2 billion in total revenues for July to September this year versus Tesla's $25.2 billion. So that's easily a 3 billion gap. Although profit wise, Tesla is still enjoying a bit of an edge, although it's about a half a billion in terms of the distance. So about 2 billion for Tesla and 1.6 for BYD. So China is actually really emerging as a dominant player in the EV market, and it supplies about 58% of the global demand for EVs. And it's actually a big lead as far as the space is concerned because regarding the fuel cars or the combustion engine cars, China is such a small player, but here for EVs, they're easily on top. And there are observations that BYD is on track to beat Tesla sales for the whole of 2024. And it's a big jump considering that BYD is currently 5 places below Tesla in terms of like size and market capitalization, but production has really picked up. Now, maybe this is also the reason why uh, economies like the US and the European Union are imposing heavy tariffs on China made EVs, right? Because they're on track to lose out to Chinese made cars. So if
Mhm.
anything, it's a very interesting development. While China could be facing some trouble locally in terms of demand and its property market,
Mm.
its manufacturing for electric vehicles is booming and the world is taking notice, Peter.
Yeah, yeah, yeah. And it's actually interesting. It's sort of a global market. They are. It's not just one market. And of course, first thinking is, could Trump, could he ruin the rosy outlook for BYD? But it is a global market, as they are really approaching the global market. Yeah.
Yes.
So they're not only depending on, for example, US, and that's important. Yeah.
Mm-hmm.
Yeah. Extremely interesting, and they are at a really good speed in the sector in China. Yeah, very interesting.
Peter, I
Now,
believe you have another bit about
yeah,
China.
yeah, that was a bit by coincidence. It's not that that this will be just a US and China sort of podcast, but it might end up so. That was one of these many just bits and pieces that we observe in the market or in economies around the globe. And it is not a game changer, but it just adds to sort of the mosaic of what's going on and
Mm.
how could what could happen in the future. And that is actually the Chinese tax collectors. They have been around in China. The reason why they've been around is that the provinces are sort of out of money. They have not sold land enough according to their budget, and a big revenue source for Chinese provinces is actually to sell land.
Mm-hmm.
Um, but also they, of course, have tax incomes. So they have been out asking uh, corporates and also, in particular, wealthy people if they have sort of paid the tax and have they sort of taxed all what they should.
Mm-hmm.
and, and it turns out that if we believe it or not, or do we trust it or whatever, but apparently there have been sort of a bit, we would call it misunderstandings or no knowledge. But many wealthy people in China, they didn't understand they should sort of be pay tax of revenues from outside China.
Mm-hmm.
That's a good one, yeah.
So it's kind of an
Um,
honesty system, right?
yeah. But anyway, it's also they've been around at some corporations and please ask them to pay the tax and so. The key is this is in a very typical gentle Chinese manner. If we look around the world, also look into Europe, um, this is the areas where people are or the authorities are looking in if they could get some more tax.
Mm-hmm.
As a to tax wealthy people more
Wealthy.
in the future. Yeah, I expect that to happen in Europe. I could expect also maybe the corporate tax to go up. And the thing is, does that happen in China as well? Yeah, it could easily be because next time it is not just a general request. It's actually the politicians thinking about okay, could we go to these sources and try to generate some more tax income?
Mm-hmm.
This is just thinking, but it is on the radar screen that is very obvious. And again, the small piece of thinking is okay. Could we see higher corporate taxation in general? And that might not be in the US, but in general. Then it's just another small piece of something that could weigh on the stock market, not today, but in 6, 12, or 18 months. So I just took notice of it, but it's worth to follow is there will be more sort of comments or action from provinces needing more tax income because that will be the sources where they will get it, I believe. Yeah. So just a small story from the big world. But let's jump to let's jump to the U.S. election and to the Trump victory. Yeah. What do we say? Do we have some winners and losers in the market?
Yeah, so actually, what was projected to be a down to the wire elections didn't turn out to be that way at all, right? And the US stocks are performing higher since the election day. But of course, the direction is varied depending on the sector. Some of the biggest winners, so to speak, so far are financial institutions and banks. They
Yeah.
apparently they expect Trump as a businessman to be friendlier with less regulations towards the sector.
Mm.
And domestic American manufacturers are also a bit up since they expect to benefit from Trump's proclamations that he will impose tariffs on more imports, including a 60% tariff rate for all China products, as if Chinese
Yeah.
products aren't already taxed enough, more than enough.
Yeah.
And technology stocks, of course. Apart from, of course, their strong Q3 profit reports. A notable mention is, of course, Tesla. So their stock
Mm.
really went up the past 2 days, and many attribute it to Elon Musk's very vocal support towards
Yeah.
Trump. And
Yeah.
yeah, and on the other side, the biggest declines were seen for the property stocks,
Mm.
utilities as well, and notably renewable energy or green energy companies are not performing so well since Trump has had made some statements in the past that he's not so keen about these types of projects. He at
Mm.
one
Yeah.
point he actually didn't. He actually said he didn't like EVs. So yeah, there's
Yes.
that. And of course, companies which have very deep connections with like Chinese firms or
Mm.
Chinese operations or factories, because again it's the effect of the tariffs that are likely to come. We know that under Trump's first presidency, that was when we saw the Huawei thing go on, and the start of the tariff war that has been continued under Biden and likely to be continued further or expanded under the second Trump administration, Peter.
Yeah. Yes, as we discussed here, you and I internally with our colleagues as well, we could see this short-term trend continue a bit, yeah.
Mm-hmm.
And that is simply because now Trump is president-elect, and that
Yes.
means he's not in the office yet. So he cannot rule, yeah? But he can say a lot, and he will be very vocal on what he's intending to do. And I think in a typical Trump manner, he will try to fear people. As he is very loud, and he's very sort of direct in his when he addresses things
Yeah.
about what he like, what he dislike, what he disapprove, everything. But he's also trying to, of course, to scare the people who will sit on the other side of the table, and that will be other governments, as a both Asia, in particular Chinese government authorities, and of course Europe. Yeah, but he is trying to already now to build up the position, and there
Mm-hmm.
there will be some. I think there could come some pretty significant remarks or whatever, some demands from his side, and that will move different sectors in the stock market. So higher volatility the next months, and in particular until he takes the office, yeah. And there will be sort of the winners and losers you have mentioned. I think that we argue it will be extended a bit, yeah, as
Mm-hmm.
more what we see today, yeah. Yes, more to talk about, more sector supports and more volatility in the stock market. That is very likely. And should we take the Trump election as we last week we actually discussed the likelihood of who would win, and our view we saw the small overweight to Trump.
Mm-hmm.
So
Yeah, you
um,
caught that early, Peter.
yeah, that was okay, but we actually misjudged the size of his victory, and that had a consequence. So when we are talking about, it was the less likely scenario that the new president would also have both chambers, as opposed to Senate and the House, meaning full control on Capitol Hill. But that is actually what happened, and that was our fear scenario,
Mm-hmm.
because we were, as we talked about, and it is still our position, that actually, regardless who would have won the office, then at some time there will be there will simply be an increase in government debt.
Mm-hmm.
That
Yes.
is what we are worried about now that Trump actually has the full control of I suppose the Senate and the House, and
Right.
it actually is, it makes him a very, very strong as U.S. president. It's not so often that the U.S. president has a full control, yeah, and full power.
Right.
So it is a very powerful U.S. as a politically powerful U.S. president we are observing, and we will see in terms of getting things done, so to say,
Mm-hmm.
legislation, new rules, new laws, whatever. Yeah. And that also give him strong confidence when he is negotiating and meeting other counterparties. So
Right.
the tariff discussions, they will be I think they'll be
Much
mighty lifting.
better.
There will be.
And the
So
tax cuts, maybe, Peter.
yeah, that is sort of what we are as of what we are listening very much into as a.
Mm-hmm.
Honestly, the U.S. middle class has voted for Trump to get in the office to fix their problems, and the biggest problem is that there's a squeeze on the just disposable household income, so to say. As
Mm-hmm.
there's not enough money in the pocket, and the quick fix would be to lower income tax, and that is meaning that the deficit increases. And of
Mm-hmm.
course, a Trump calculation would be say, okay, hey, yeah, no worries, we collect the money with higher tariffs, more tariff on so, yeah, import tariff on the Chinese goods and the European goods. And then they could stop the payment to the Ukraine war and say that is yours problem. They just take over. Yeah, the calculation won't as a, will not be sufficient, and there is a significant risk that there'll be more government debt issues, and
Yes.
that is actually well, it is leading to us to say we have a warning in our
Mm-hmm.
global outlook, because what we're worried about is that the current rate cuts, they will not have the same positive effect on the bond market as we expected for just 14 days ago, maybe. This is what we have for internal discussion. It's a big discussion, and
Mm-hmm.
saying do as a, and we haven't concluded yet. So it is just to share with the with people who are listening that it is our discussion. Can it be that the long-term rates, as of at least 10 years and longer, maybe even down to 5 years, will not move as much lower as we had expected?
Mm-hmm.
So and that would be a bit of threat to the stock market.
Yes.
Yeah, the 10-year treasury yield is important. It also means something about the activity in the housing market in US, for example.
Mm-hmm.
Um, and it means, of course, a lot on how attractive is it to hold bonds in general, as how attractive is it to be on the, particularly on the long end of the curve. All these things, they are up to discussion here. Um, and it's sort of a big thing to conclude on. So we are still thinking. But
We're
are we also
very
thinking about
watchful.
this? Yeah, are we thinking about the Fed?
Right.
Um,
Another
what do we?
major thing.
Yeah,
This So actually, the Fed is also meeting. They end later today, I believe, and my time.
mm,
Yeah, there are discussions that they are unlikely to follow up with another 50 basis point hike. Coming from September, but
yeah,
as far as macroeconomic figures are concerned in the US, it's pretty strong. Inflation is going down closer to 2%. GDP figure for the third quarter is a bit respectable at 2.7%.
Yeah.
Unemployment has stabilized at around 4.1%. Job creation is better than expected. So they can take their time in terms of unwinding the very high interest rate environment that they have imposed since 2022. But yeah, as we said, we are very watchful about this because uh, as as the Trump administration comes in, and should they impose these tax cuts, that would put pressure on the budget deficit, the federal budget deficit, and of course pushing more debt, and that is
Yeah.
something to be really concerned about. And of course, a high debt scenario would lead to further higher interest rates. So
Mm.
they have to calibrate it again because while conditions right now are looking ready for further reductions,
Mm.
it doesn't necessarily feed into the economy directly, like immediately. So anything that has to do with this outlook, it needs to take caution. And
Mm.
maybe I'm seeing maybe a 25 basis point cut from the Fed instead of a 50. Uh it could send the wrong signal if anything bigger than that is imposed, right, Peter?
Yeah, exactly. No, that would generate volatility if they cut with more than 25%. I would argue. So I agree. But the 25% rate cut is surely in the cards, and that will happen.
Mm-hmm.
Um, then we can discuss if they can go as deep with the rate cuts as originally thought. Again, that is also a bit up for discussion here. And then we, as a no doubt, as a bit higher volatility in many areas, even maybe higher political volatility some
Yeah.
places. We we have seen the first government sort of tilting, and that was Germany in yesterday evening. Now that has been on the way a long time. The German government has been dysfunctional. We have talked about it. I don't know how many times if we are talking about Europe and
Yeah.
Germany, um, and sort of the very particular reason was actually a squeeze that the German finance minister and also party leader of the liberal FDP he
Mm-hmm.
made Friday. He came up with proposals that he knew not.
Doable.
It was not doable and was absolutely not acceptable for the two other parties in this three
Mm-hmm.
party government coalition. And then it ended up yesterday evening. Actually, for German sort of in German politics, it was very dramatic to see live that the German chancellor he spoke more than he's done for 3 years, and he he was actually, you could see he was for one time he was a bit emotional in the way that he was angry,
Mm-hmm.
and he was angry with his partner in the coalition, the finance minister. And actually, the finance minister had asked if they could do a quick election call. But the conclusion was that the German finance minister he was kicked out of the government, and so was his party. And now the consequence is that they want to finalize some legislation or new laws before the Christmas, and then there will be a confidence vote in mid-January, where of course it'll probably be a no vote. That is what expected, and then a new election in the second half of March. The key is that this is maybe some would argue it's an early election, yes, but it's certainly not a snap election.
No, that's too
Right.
far, right? A few
Yeah.
months ahead.
And that is sort of this is the uprun. But there is a small thing. I simply
Mm-hmm.
think it would have been too difficult for this very, very weak German government and a very weak chancellor to meet up against Trump.
Mm-hmm.
It was the meeting would simply not function. And I would say this is the first casualty from already
On
from
the same
Trump
day.
winning. Yeah, from Trump winning the election in US. And German political they need to reorganize to stand up against Trump simply. But that's sort of a bit on the side. It's very speculative, but it is actually very sort of remarkable what happened.
Right.
Anyway, Interesting. Mel, what do we say to the global outlook here? Is it only sunshine, or are we nervous as indicated? What is the take?
Yeah, so a lot of developments just the past few day or two, and we are looking at these developments and what's coming next very closely. So as we
Mhm,
discussed earlier, no reason yet, just yet, to change our long-term view, but there are reasons to, or there are facets that we need to be watching closely or closer
mhm,
than before. We'll have to see how the election turnout in the US will affect and spill over to the global markets. As
mhm,
we've seen with Germany, for example, that's maybe a
mhm,
teaser of some sort. So yeah, China, for example, is a major um, beneficiary or otherwise of
mhm,
the Trump election. So it means to be seen how he will handle China and Chinese imports this time around. We have an idea how,
mhm.
but it's a question of the magnitude this time.
Yeah. And there will also be a Chinese response. And one of the
Yeah.
responses is actually more internal, saying, because it is why they haven't defined the fiscal bazooka that they will
Mm-hmm.
launch. They simply wanted to see what happens in the US, who would win the office, Oval Office. So there will be a lot of things out of China as well. So we still believe in, we still go for sunshine in the financial markets, actually. Um, We are well aware that we expect a higher volatility than we have seen,
Mhm.
and the higher volatility will continue rest of this year. Also, maybe the full first quarter next year. But we are comfortable with our overall position in saying we like to underweight Europe, we like to overweight US, we like to overweight Asia, because this is still the picture of who will also on sort of a macro level win.
Mm-hmm.
We are still okay with being on the long end of the fixed income curve, but that
Yes.
is up for discussion. That is what we really have up for discussion, saying, okay, is it that attractive as it was for just 14 days ago? So that's probably it, so to say. That is so we're staying optimistic on the world, actually.
Mm-hmm.
But we have a few things we would like to more volatility, and we have a few things we would like to consider in the fixed income market. And so we will be busy, and that's basically it for today. We are happy for all the listeners out there in the audience. Thank you for listening, and Mel, thank you for contributing.
Thanks, Peter.
We'll be monitoring global developments and will share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Lundgren's Investor Insights. Thanks for tuning in. For expert insights on the go, download the Lundgren's Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated mutual China fund. To know more, visit lundgrenscapital.com.